Hello everybody, this is John Gilbert at Security First Asset Management with a weekly market update for the week ending December 17th. Last week, the three major indexes, the S&P 500, the NASDAQ Composite, and the Dow Jones Industrial Average all ended up with this positive end to the week. They recorded their seventh consecutive week of gains. This is the longest such streak for the S&P 500 since 2017. Also, the S&P and the NASDAQ hit 52-week highs last week, and the Dow Jones hit an all-time record. Now, continuing a recent pattern that we've seen here lately, the week's gains were also broadly based. Small caps outperformed, and a surge in the Russell 2000 lifted out of bear market territory for the first time in 20 months. Along with the positive performance in markets, the Chicago Board of Options Exchange Volatility Index, which is sometimes called Wall Street's fear gauge, fell to its lowest level in the post-COVID era. Now, moving along to inflation data, the Consumer Price Index rose 3.1% in November from a year earlier, which is a slight slowdown from October. Inflation has stabilized this year, but it is still above pre-pandemic levels and above the Fed's target rate of 2%. Speaking of the Fed met last Wednesday, December 13th, and at that meeting they decided to hold the federal funds rate steady at a 22-year high. Now, this seems to indicate that the last rate increase in July marks an end to the most aggressive cycle of rate hikes in 4 decades. Now, the Fed did pencil in 3 rate cuts for 2024 with a median projection for 75 basis points of rate cuts coming in 2024. That remains to be seen. On the inflation data and Fed signals last week, the longer-term U.S. Treasury yields fell sharply, actually bringing the yield of the 10-year U.S. Treasury note below 4% for the first time since July. Now, moving across the ocean, last Thursday, the European Central Bank and the Bank of England also held interest rates steady. The positive data that we've received lately, whether it is declining inflation, or signs of economic growth, or cooling labor markets on both sides of the Atlantic, have major central banks repositioning themselves. That is all for the weekly market update. Thank you so much for listening. I'd like to wish everyone happy holidays and a Merry Christmas. Have a good day.